have in the market. I have 4. Yeah, so I put all these 4 together to give me more confidence and more confirmation in the market.
Okay.
Yeah. So basically, we have that basic movement of the market. We have the expansion and the retracement. Someone will say the pullback and retracement, or the break and coming back again. The same as the break and retest. So put it in the normal way, like break and retest, and we have the expansion and what the retracement, the normal level. So when you go down, like the same way the market moves, the market is not on one term or maybe steady. It's always trending. Even when if the 4 hour is not trending, it may be the 30 minutes or the 50 minutes is trending, because maybe where the 4 hour might be consolidating, moving in a side range. But when you go to the 1 minute or the 50 minutes, you will see that there are structures being broken and coming back and moving. There is a movement in that 4 hour range, that one candlestick. There could be a lot of movement in that candlestick. So we have the normal uptrend and the downtrend, where we have the expansion, the retracement, expansion, the retracement, expansion, the retracement. And these are the things that I would like to trade.
Okay.
Yeah, for instance, when I have an expansion, I will just wait for some small retracement. Then I take that trade. The candlesticks and the confirmation that I'm going to get, that is what I'm going to use to take that trade. So this is just a little presentation that I'm going to do before we move on to the chart. So the same way, this is how it is. Normal expansion, retracement, expansion, retracement, expansion, retracement. So the retracement is what you are going to stand on or based on to take a trade. So there's no way like missing trade or maybe I've missed this trade. No, there is always a retracement. Anytime market expands, there will be a retracement. No matter what, there will always be a retracement. So I don't rush. When I miss something from the bottom, I will just wait patiently for that trend to end. When it ends, there will be a retracement. So when that retracement comes, that is when I'm going to step in to also take my trade and target the next high. Simple as that. So there's no way you are rushing in trading. And this kind of strategy gives you the patience that you need in the market.
Okay.
Yeah, that is why most of the times I'm very patient. Because maybe the phase that we are in right now might be an expansion phase. I can't be trading or going in and be taking trade in the middle. I don't like that. I will just wait patiently for that trend to end. When it ends, after the retracement is also ended, maybe it will end on a support or a resistance line. So per what is going to happen over there, yes, that is when I'm also going to step in and take my trade. So this strategy also gives you the patience that you need in the market. Okay. So yes, and at the side of that, I use the FIB also to determine the ranges that I'm going to take the trade. So from the 50 to 61 point is like a golden area for me. Do you use the FIB sometimes?
No, I learned about it I learned about it on the YouTube there.
It's good.
Actually, I don't know how to use it.
Yeah, the FIB is also good. So when you mark from that 0% to that 100%, there's 50% and 60 and the 70%. These kind of 3 levels are very great levels to catch the impulse moves. After that impulse moves, okay, the retracement that is coming, that is we use the FIB to determine the end of that retracement, because you could see a rejection. The rejection will be started from the 50%, and mostly it will end at the 60%, 63% or something. That's when we will also step in to take the trade. So for instance, if you look at this chart now, you could see that anytime it comes, you will see from this angle here, the 50% retracement. You see, this is the 50. Yeah. So from the 1 to the 0, this is the 50%, this is the 62, and this is the 70%. So you can see from the 50 to 62 level, we call it the golden zone.
Okay.
Yeah, that is the end of that retracement. And maybe that retracement, there might be something there that is going to stop it. Retracement doesn't occur just like that. It has to fall under maybe a resistance or a support level or an institutional candlestick that is going to end that retracement. Yeah, so when you apply the FIB, it also gives you the confluence. So FIBs are also there to give us what the confluence that we need in the market.
Okay.
That is why it's important to use it. Maybe sometimes it might not make sense on the chart, so you remove the word. When you apply and it makes sense, that is when you add it as what, as your confluence. Not all the time that FIB is going to make sense to you. Yeah, so the same way from the 0, from the 1 to the 0 here, we will see that from the 50 to the 60 level, we see price was stopping over there. And anytime you stop, there is something, there is this black candle. Do you see, do you spot this black hammer over there?
Yeah, I have seen
it. Yes. So you see it either falls under support or resistance or an institution candlestick that is going to stop the retracement. So when you come here, you see there will consolidation over here too. When you go to the maybe 50 minutes or the 1 hour or something, there might be an institutional candlestick over there, and that is going to that have more orders on it. So when I see something like this, I will just go here, place my limit order here, and put my stop loss just above here, so that I won't be stopped. Yes, so it means there were orders here that stopped price from going further because of their institutional blocks. Yes, I call it sometimes footprint. They will come back for that footprint before the expansion continues again. So you see, so that we use the FIB as to give us more confluence in the market.
I see.
Yeah. So it's sometimes you apply and it will not make sense, but as we have started, I will be applying more and more for you to get more understanding of it. So the 50 and the 60 are the golden area. Sometimes you have a FIB that the candlestick will just tap just the 50% and then started retracing, or sometimes it will come inside the FIB between the 60 and the 50 to play in it for a while before it started dropping.
Okay.
Yeah. So that is a little scenario about a Fibonacci retracement. We always use the 50% and the 60 level for our confirmation to be giving us more confluence in the market. So when you go here, so this is where my strategy comes in. The break in market structure, or sometimes I call it break of market structure.
Okay.
Yeah. So this is how it looks like. Maybe 1 hour you might not get this, 4 hours you might not get it, but 50 minutes maybe it is happening. Maybe 5 minutes it is happening, but maybe 1 hour you will not be getting this. Maybe 2 hours or 4 hours you might not be getting it. But always we look from the bigger picture to the smallest one. Yeah, we started from the big one to the smaller size. Maybe you might not get the entry from the 1 hour, because I'm a swing trader. My trades are always taking base from the 1 hour and the 2 hour, 1 hour, 2 hour, 1 hour, 2 hour. Normally I don't go to the 50 minutes.
So like 4 hourly.
Yeah, because I swing, so my targets are 4 hour and 1 hour, 4 hour and 1 hour. I don't go to the 50 minutes. So when you could see here is in time market stops, it means there is something there. Market price will never stop just like that. They stop to accumulate more orders in the market. For instance, you see one expansion coming, all of a sudden price stops here, it retraces a bit and then continue going down. So when you see this here, this is where the retailers would be buying, thinking this is a support. You see?
Yes.
So when the price came here, the retailers will start buying, because it's a support. So definitely the price is going to reverse. But no, so the institutions will leave this area for the retailers to come and what buy. So the moment they buy in, they stack more orders here, they too will come in and drag price down to their stop loss.
Okay.
After they will pull back inside again. You see, they will come in again and they will start to buy again. And they will still push the market down. Yeah, trading. So when you are trading support and resistance only, that is when you have this, you kind of face this kind of problems. So anyone who trades support and resistance and market structure will not always be going against the trend, but will be following what the trend. Sometimes we go against the trend. Even sometimes I do. Sometimes I often do it. Like maybe this week, my directional bias maybe on USD, maybe only buying. I wouldn't be looking at the structure and what is happening. Or today, maybe this week I'm buying. So I'm just looking at what buying setups to buy. Then it means if price comes here, I will buy. Comes here, I will buy. It comes here, I will buy. And anytime I buy, they will stop me out because the direction is what is down. We are not getting any clear indication of what the structure being broken. So anytime price stops and the retracement occur, that is, we mark that level as a structured level. Until that level is being violated again, we don't call it uptrend. It's still downtrend. Yeah. So we will be looking at this area. This is what the major, the last structured level. So if I want to go up, if I want to be buying, I need to see price breaking the structure. I need to see price violating here. I need to see price comes in here, breaks this up, and then quickly reverse in. So when it breaks in, it means it has expanded. So we need a reliable retracement, and then we take the buy. But if it comes and fail to break this up, it means we are still in a downtrend. So we will still be selling. We will still be selling until price finally breaks the structure. So you see from this B setup here, the moment price broke this recent structured level, we had a retracement. That is why I don't buy out of breakouts. I don't trade breakout setups because it's kind of risky. So trading the pullbacks is good. To be a pullback trader is very good because it gives you that kind of patience to wait for an retracement to end. Then you take your buy. So you kind of see that market structure and plus support and resistance will make sense more than trading only support and resistance. Yeah. And after upon all that, I trade the chart pattern too. So when you can see here, we have inverse head and shoulder pattern from this angle, or this you can see from here we have inverse head and shoulder pattern. You can see that. Yeah.
I always see it on your chart, leaving shoulder and pattern, head and shoulder.
Yes. So this also gives you the confirmation, the confidence to take the trade. So you could see a structure is being broken, an expansion and a retracement being occurred. At the same time, where the retracement we have a chart pattern too over there. Nothing is stopping you to buy. You buy, you put your stop loss below here, then you are good to go. Yeah. So chart pattern, market structure, support and resistance, these things gives you more edge on the market. It gives you the confirmation that you need. Yeah. So this is how we trade the normal break of market structure until the recent structure level being violated is still a downtrend. So the moment it got broken, then we were looking forward to go long from that angle.
A new trend.
Yes.
Okay. And a new trend how do you determine that it will go long?
That's why I said it depends on the overall direction of the market. Maybe you could look at it from the weekly and you spot that no, weekly is an uptrend. On the weekly, we have an uptrend, daily uptrend, 4-hour uptrend. So when you go to the 1 hour and you get a beautiful setups to go long, then it means it's a long-term long that you are going in for.
Okay.
That is why I can swing those trade. So I mark my levels from the daily and the 4-hour and the weekly, so that the moment I determine or I get to know that the trend is going up, so when I spot something like this from the 1-hour, then I'll be targeting the key levels. I'll be swinging to the key points and the key levels, because the market cannot go one direction up. No, it will go at a point in time. This thing can go okay again. We have something like this, then the resistance structure level will be broken, and we'll be seeing a downtrend again coming. Yes, and that also is going to give you another opportunity to buy again. So the thing is, we look at the trend, where it's the direction of the trend. If it's an uptrend, then we are going to be looking for something like this to be looking for buyers only. Yeah, so for a short-term sell in the buyers trend, that is when we will go to maybe the 50 minutes and be looking for something like this to occur from the downtrend. Then we'll be we'll be selling. But until that, we look at something like this and we'll be buying. Anytime it pulls back, we buy. Anytime the expansion occur and it retraced, we buy, because the retailers will be selling. So this will trigger the institutions to buy more. And we'll be riding with them. And we'll be riding with them. So are you clear with this?
Yeah, I'm clear with it, boss.
Yeah. So for you to get your take profit levels, you'll be targeting the highs. The highs, yes, the highs, the structured levels, or maybe resistance. So you'll be targeting all these kind of levels so that you get what you want from it.
Okay, boss.
Yeah, the same way. So you could see here from the bullish and the bearish trend. So the OTE gives you the low risk to take the trade. So when you see something, an expansion, a retracement, it means another expansion and retracement. So you could see here, this gives you a low risk buy.
Yes.
Yeah. For you to get in here, maybe it breaks out from here. Okay, it breaks from here, and you start buying from this angle. It will come down again. The risk will be high. Yeah. So this gives you, the retracement gives you a low risk buy for you. Yes, it helps you reduce the risk that you are involving yourself in. The same way to the bearish way. You see a break of structure, retracement, break, retracement, then it gives you the low risk to sell, and that gives you the less patience, the patience that you need to take the trade. So with this, your risk to reward will be high. Maybe you'll be risking only maybe one from this angle, and maybe the target, the next low might be maybe 4 to 6. So you risk one to get 6, 8, 9, 6, 5, 6, 5. With with the less risk. That is the importance of the structures that we trade. That is why everything about me is structured, so that I will know a structured way, or so this even gives you a positional place to place your stop loss. You know that if price is going to reverse back, it has to get rid of this retracement level here. So until price gets this retracement low here, this level here, there is no way price is going to reverse. So it just come back and break this structure from here. So then it means if I'm going long from this angle, then my stop loss is going to be here. You see? So it gives you the less risk and a better place to place your stop loss than taking in and maybe choosing 5 pips or 10 pips maybe, but rather your stop loss is being at a better position with better or proper risk management. So you see one benefit or one good aspect of trading the market structure, it gives you less risk to go in. So the same way when you come to the range high and the range lows, the same way you could see expansion, retracement, and then finally price breaks down the structured level with a bearish candlestick. This indicates the strength in the market. Yeah, this candles indicate the strength in the market. So the moment it breaks, you wouldn't be selling from this angle. You see, those who trade breakout, the moment it breaks, they will be selling, but price will come back and stop them out. before it continues. But for you as a pullback trader or a structured trader, the moment the expansion occurred, you'll be waiting for what? A pullback to get in with what? Low risk to what? To sell. With your FIB and everything lining up to meet or to get the confluence you need. So you'll be looking for the sale over here, but rather not here. But the breakout trader will be selling from this angle and you'll be selling from here. So the risk the breakout trader is going is very high, but your risk is very low. So your stop loss will be here. A breakout trader stop loss will be here. Imagine if you put your stop loss here, a breakout trader puts your stop loss here. You see your risk is what? From here to here is low, but from here to here is the risk is high.
Yes.
So this also gives you what?
So how do you determine that the market is consolidating there? So it will expand again. I want like any candle confirmation there.
You have a candle confirmation there to tell you that. So you could see that from this angle. From this angle here, after the break, this kind of expansion ended, you see the candlestick that came. There was rejection in the candlestick. If you could see a big body with a long wick, a small body with an you see. So this is indecision candle. An indecision always favor the trend. If it is going up and you get an indecision candle, it means the trend is going to continue.
Okay.
Indecision always favors the trend. No matter what, it will always favor what? The trend. So you see here, indecision. The moment this candle closes, you'll be starting to what? To sell. If you know what you are doing, the moment this one stop, you can start selling. Because now we don't know where the direction of the market, because this is what 4-hour candle. So 4 hours, the retailers are buying more. But he who knows that trend is being changed, you can sell.
Okay.
Because from here you could see that there was an expansion, a big expansion. See, a big expansion, and no matter, there will be a retracement. There will always be a retracement. So when the expansion occurred, this is the retracement that is coming. So the same way, if we are going to, assume this is an uptrend that we are taking, and you see this big expansion happen, then this is the next level that we will be looking to buy. Not here. We can't buy from this angle because it has not ended yet. The only time it will end is what? The next structured level. That is going to give us the opportunity to buy. So when you buy from here, you'll get something. You get from here to here. It's quite good pips. You can put your stop loss to break even. Yes, before it comes and crash you down. Because there's not 100% sure in the market. Even if your edge and everything is lining up, you can still fail. You can still lose a trade. Yes. That is why we use proper risk management and everything. So by the strength of these candlesticks here will determine who are controlling the market. So you have an indecision candle here. You see another big rejection from this 4-hour candle. Aside of that, everything moves away from the market and consolidates. It pulls up. No, it's not an uptrend. They are coming down. Yes. Means the buyers are weak. They can't push their trend up again. So the sellers are taking control now. So you can see everything's lining up. So if you missed to take the trade from this angle, you could have gotten the trade from from here and target the recent lows. You get it from here, you target the recent lows. You get it from here, you target the recent lows. You get it from here, you target the lows. That is how we train with the structure.
Okay.
Yeah.
But sometimes I see your trade, you leave it for it to go about, 4 times the friend that you are teaching me.
Come again.
I'm saying I always look at your trades and I see that like you go for a long trade.
Yeah, because I'm swinging and I'm following the direction from the highest time frame. maybe from the 1 week or 1 day. This is where I'm chasing the trend. Yeah, so it kind of gives me the more like confidence to hold that trade. So when I know that indeed this, no matter what, price will hit this level before we have a big push to the downside, then I'm going to hold that trade. And it's the same thing, the same scenario that I'm explaining here. So when you use this one and go to the weekly and use the same kind of scenario, you could find those kind of levels. You come to the 4 hour and you could be looking for the same shot. You go to the 1 hour and then look for the entry to swing that setup to get that level that you want from the market.
Okay.
Yeah. So in the same scenario, the same way we are doing on the 4 hour, you can take this one to the weekly. You can take it to the monthly, to position trade. You can take it to everywhere, every time frame that you want. So this works with a 1 hour, 1 minute to 5 minutes and the 15 minutes. People are using it in the 15 minutes to kill the market.
Okay. Then they enter hard.
That's why you use big lot size, because they know from that kind of range, price will be going very fast. So if let's assume this is the one minute time frame, and he just quickly identified this, maybe he will not take the trade from here. He will look at this level and take the trade, and then we'll hold it to the to the next low over here. So this gives him the edge or the confidence to use big lot size, because from here to here the pips will be very small from in terms of what the low time frame, maybe 15 minutes, maybe it might be 5 pips. 5 pips, and he's targeting maybe 15 pips here. So 1 to 3, the same risk reward ratio, and you have the confidence to use big lot size. Yeah, the same way I could use this to go to the highly time frame, maybe risking 30 pips and gaining 90 pips. The same risk 1 to 3, but maybe the lot size I will reduce it. But from the 15 minutes, I will not reduce the lot size.
Go based on the straight standard.
Yes, based on the kind of capital that I'm having.
Okay.
So yeah. So now this is the big issue. This is the big picture. Yeah. So how to spot the end of the trend? This is just a presentation after we go to the chart, and this is how to spot the end of an uptrend or a downtrend. The same to the downtrend to the uptrend. So you could see from the previous one that we had an inverse head and shoulder pattern before price started moving to the upside. So the same way we have a bullish trend. You see structures being broken, structures being broken, structures being broken. Structures being broken, being broken, being broken. But when you get to this level, price fail to make another swing high. So when it fails to give you a swing high, that is when I use the RSI, the RSI indicator.
Okay. Yes. I use that. I use it in entering the market
to determine or to get a divergence from the market. So if I spot something like this and I see a break of structure, I will not even see the break of structure. The moment I notice something like this, maybe this has not occurred. This has not occurred. Just from here went up, but when it came here and failed to make a new high, couldn't close above this structure level, then I'll be looking at the RSI. The moment it gives me a divergence, then I'll start selling from here. My first sales will be coming from here. The next sell that I'm going to take is to see a clear break of structure with a big expansion and a small retracement coming back, aligning with my FIB 60 or 50% level. That is when I'm going to use the appropriate lot size to take this trade. So from here, it's less trade that I'm taking, but from here, it gives me what? But from here, I have this angle. I get the confidence now to go very short, to target the nearest low from the market, because you could see that the trend is is ending. The moment it fails, the moment it fails to make a swing high, and a swing low has been occurred, and it broke the recent structured level. It means we are heading to what? To a downtrend.
And a new trend.
Yes. So with the FIB, with the RSI, with the expansion and retracement, you see, you could this, and per the chart pattern that is going to appear here. So you could see that here cannot give you a double top, but you can have maybe head and shoulder pattern here, and this is the neckline. You see, this could be head and shoulder pattern, and here is the neckline. So we take the sell from the neckline. The stop loss is here. Then you have a good trade to take. So always the chart pattern, the Fibonacci, the structures, and the RSI, I combine all these things together. So that's why when I'm taking a trade, I have full confidence on the trade. Though I'm not sure it's a win trade, but I have the confidence in the confirmation to take that trade, because my edge, this is what the edge, this is the kind of edge that I have in the market. So I'm not scared to take that trade. I will take it. If I lose, I learn from why it's lost. Maybe the fundamentals might come in and destroy everything. But the technical aspect, it's good for me. But maybe I don't know what the kind of the fundamental, what is happening. But the technical aspect is good.
Okay.
Yeah. So when you go to, this is how it will always be looking at the bullish trend towards the downtrend. So if the RSI gives me a bearish divergence, then if I fail to even get this sell, the moment this structure level is being broken, the moment the expansion ends and the retracement pulls back to get to the neckline, I'm selling to get to this low over here.
Yeah.
Selling to get to this low over here. That is very simple. So if I don't see such kind of chart patterns, if I don't see anything similar to this, I don't trade. If I don't get something, you see, the whole last week I didn't trade. I didn't post anything to the VIP group because what I was seeing, I didn't like it. So I just called that week off because I don't like the kind of the formation of the candlesticks and the chart patterns that I'm getting. Sometimes you have to be strict and follow your rules and your plans. That is going to help you become a successful trader. So if my plans are to look for setups like this and trade, so if I'm not getting anything similar to this one, why would I trade? Just turn off the chart and do another 10. But if you're always sitting close to the chart, if you're always with the chart, you might not be getting something like this, but you will force yourself to get something like this in trade and you will lose money.
Yes.
Yeah, that is another big blow
I'm always studying the chart. Every time I will study chart. I'll be looking in the market and seeing what is going on. So always, it's giving me pressure to trade.
Yeah, it will give you pressure to trade. Last week I didn't trade because anytime I open the chart, I see different thing. And this is not the edge that I need, or this is not the plans that I have planned to take a trade. So anytime I open, I see it, I close it, I do something different. But if I open and I get something good or similar like this, then I'm going to trade with a proper risk management. But if I'm not getting anything like that, I'm not trading. I'm not trading because it's money. I wouldn't be entering a trade that is going to give me a headache, or I'll be working and be thinking about that trade. I don't like that. I want to take a trade and forget about that trade. It's either go to my take profit or it goes to my stop loss. This is how my mindset is. If I take it, it's either it hits the stop loss or it hits the take profit.
Okay. So does this strategy works on gold?
Yes, gold respect break and risk test.
Because I like trading gold too much.
Yeah, every beginner pair is good. I'm telling you, a lot of people are into gold. The moment the new trader is being like, the first pair they will pick is gold.
First, I used to trade the currency pairs for long. And so I added Nasdaq and gold.
I know, I know. Because in the group, there are a lot of people trading gold, and even most of them doesn't understand gold. I don't trade gold anyhow. I trade gold with vivid patterns and clear direction. I don't just open
Yeah, I
gold and
see
trade
that. I
gold.
see.
Yeah, I
I
don't
see you
trade
don't
gold.
post both.
No, 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 no. Anytime I take a good trade, it's a win trade for me. I don't
Okay.
trade gold anyhow. Now I have a clear chart on gold that if next week, if what I'm expecting happens, then I'm going to buy gold. And if what I'm expecting to sell, if it happens, I'm going to sell gold. I don't trade gold anyhow. The same as the
Okay.
NAS and the US 30. We all have different ways of looking at the charts. You see, I have my plans and my rules. If it follows that, I'm buying or I'm selling that particular pair. But if it doesn't follow that, I'm not touching that pair. I'm only going to,
I see.
yes, I'm only going to be buying or be selling if I see if my plans, if the pair is following the direction that I want and giving me the kind of expectation that I want, that is when I'm going to trade that pair. But if it doesn't, I'm not going to take that trade.
Okay.
I have NAS and US 30 on my watch list, but I don't trade them. I do the analysis and I see how they respond to my levels. Sometimes they respond good, sometimes they. But the moment you see I've posted a NAS setup, it means that trade, it's 80% sure of winning.
You
So
have
I don't post.
confidence in it.
Yes, so I don't post them anyhow. But on the currency pairs, there I know them. They are my friends. I trade currencies. But anytime,
Yeah, you like trading US
yeah,
currencies.
yes, because they are very manipulated pairs. And if you want to get money, it's
Mm,
being manipulated. The manipulated pairs makes you more money. Because
okay.
yes, the currencies, you know where all these kind of institutions, big institutions are coming from the USA and all these kind of people. So the currency pairs, the US pairs are very manipulated pairs. So if you're a beginner, you step away from the manipulated pairs because that is when what the institutions are trading most often. If you don't want any problem, you can go for CHF, card JBPY, and those kind of pairs. Yeah, they are less manipulated. But the USD is very
Mm,
manipulated. Yes.
yes, yes.
Mm.
This week the US's JPY was going for long. I was monitoring it.
Because if the way I was seeing those kind of pairs and how my levels are, they were not making sense for me. So I just call
Okay.
it off. So I just finished my analysis even yesterday when we were chatting. That was when I was doing my analysis. And most often I have
But then I
two,
was
yeah, I have two trading view accounts. I compare,
okay.
I have the same kind of chart, but I compare them. I
How do
have
you do
one,
so?
I have one Euro USD here. I have Euro USD here on this another chart. So after doing this, I come back to do another analysis to compare which one is going to favor me or which one is going to move. Because I can't trust one analysis on one setup, on one
Okay.
pair. Yeah, I can't trust one analysis on one pair. So I have to do it twice and see how they are going to move. If this one behaves good, I take that one. So, and most often, all my pairs are moving together. Only sometimes I could
Okay.
analyze a GBP USD here and another trading view account. You see a slightly difference in them, but most often I see them, they are moving. So when I get those that are moving together, then I mark them on that week to trade them. But if I get slightly differences between two pairs, one pair with two different analysis, then I pause that pair and I see how they behave. I don't just get up and trade anyhow. I trade with understanding and everything. Even upon all that, still I still lose trades. There's no way you can.
Yeah.
There's no way you are going to beat
100%.
100% trade. Yes, on all that. So this market structure has three phases: consolidation, uptrend, and what, and the downtrend. So
Yes.
yeah, so we see the bullish conditions. It's the same vice versa towards the bearish watch conditions too. So if I'm going to take a long, I wouldn't be buying from the breakout, because anytime it breaks, it will come back. That's one thing I identified, and it has kept me so long on the market. Because when I realized that anytime price breaks, it will come back. Anytime it breaks, I don't rush. I will just wait patiently for price to reverse back, to give me less risk and a good opportunity with good risk to reward. That is one thing I like about market structure. That is one thing I love about market structure. Anytime there's a breakout or anything, I don't rush. No matter how long the pips are, it might be 100 pips. I will wait for that 100 pips to be felt before I take that trade. And it's always happened. Car JBPY, I posted that pair on Instagram last week, Friday or so, Thursday. You see, price has hit that entry level twice. And anytime it comes, I take that trade.
Okay.
See, that makes my levels very strong, because I know that level is a structured level. So it went up and hit the first structured level, came back to that retracement level that I took the first entry. It hit that level again. I insisted buying again, and now it just went through my my first TP, and it's going up. So sometimes the levels, and don't rush to push your entry to break even, your stop loss to break even. The price will come back for something, because on the institution's mind, after price move 30 pips, traders are in rush to move it to break even. And break even is the stop loss, and the stop loss is liquidity for them. It's a fuel for them to move higher. So anytime they move price maybe 30 pips, they will quickly move their stop loss to break even, and they will come back for it. They come back and hit it, and then moving up. That's where people will be saying, oh, Charlie, media, when I move to break even, it always comes and stop me before going into my direction. The moment it moves to break even, it comes and stop. I don't move to break even anyhow. Even my take profits, one will be hit, and still the stop loss will be there. Because at the back of my mind, I know there's always retracement. Nothing is permanent. It cannot continue going up, going up, going up. It will come down at a point in time to clear something down before it goes up again. So I will take partial, and the stop loss will still be there. And it will come and hit that entry level again, and I will buy, and the stop loss will still be there, and it will go up again. Because I know that level is a structured level. Until that level is being broken or violated, there's no way price is going down. It will always go up. So I have the patience and everything to wait, but I will be closing partial. The moment I notice 30 pips or 50 pips move in my direction, if I use one standard lot, I close 50%. I don't move to break even. I will close 50% and use that 50% as what? The stop loss. When it moves back or another formation is being formed, I look at another entry and I buy. So I'll be stacking whilst it's going up. The moment the trend is changing, then I close out the trade. Simple as ABCD. Forex is not that hard. If you have a plan that you are following, Forex is never hard. But if you don't have a plan, you're always sticking to the chart, that is when you are going to create problems for yourself. And you'll be doing the odd one, and you'll be trading bullshit, and you'll be always losing money. So when you lose money twice or fourth, you see, then the psychological will kick in and say, anytime you trade, you lose money. So let me go on the demo. And you'll be with the demo, and you'll be making profit. The moment you comes back to the live account, it triggers again. You are going to lose. The moment you take away one loss, you are going to lose again. You close that trade, you open a demo account. It happens. It happens to me most often. Until you make your mind and you set the mindset right, you will always be going back to the demo. The moment you lose one trade, you close the account, you remove the profit, and go back to the demo. But once in the demo, you'll be making profit. You'll be making profit. You'll be making profit.
The demo is not, it's God's, it's not your money, so you have confidence.
Yes, you have confidence. You can hold. So why can't you hold if you're able to hold the demo? Why can't you hold the live account? If you are able to hold them, why can't you hold the life account? Yeah, and most often
the
people.
thing is, we should put it in our mind that it's win or lose. So if you lose money,
Yes.
fine. If you win, fine.
Listen. If a week I take 10 trade, and if I lose 6 trade, and if I win 4 trade, I will still be in profit.
Yeah.
Because I'm counting the percentage, not the trade or the money.
Yes.
If I put 0.2 on a risk and I target 1.7, and if I lose 0.25, it's maybe 1 or 1.5 or something. But if I'm winning, my wins are 1.7. If I win 4 and I lose 0.2, 0.24 or 10, I will still be in profit. If you do the calculation, I will still be in profit. This is what helps me. Percentage, not money or not profit, but percentage. So all my trades, I put maybe 25%, 25%, 25%. My wins, my take profits are 1.7, 1.5, 1.8, 1.7. So I could lose 3 trades in a row. The moment I win 1 trade, I'm up in profit. Yes. So that's why I told one of the guys in the group to focus on percentage, not the money. If you focus on percentage, at the end of the week, you know how many percentage you had. Also, maybe at the end of the week, maybe I had maybe 3.5% win and 1% loss. It's not a loss. So when you subtract that 1% out of the trade, you make 2% gain. You are going up.
Yes.
Yes. With a proper risk management, proper lot sizing, you will win. You will win. But people don't do it anyhow. They will not have the time to calculate all this kind of lot sizes and everything. When they see the setup, oh, let me put 35, 20 pips, let me use 0.05. Let me use 5. Let me use this. Then with no better proper risk management, you see, you'll be blowing account each and every day in and day out, and you'll be losing money. And sometimes I hate sharing signals. I prefer you do it on your own. You learn, you fail, and you learn from that.
Yes.
That's why sometimes I don't want to share my setups.
One thing is, I was assisting one of my juniors in school. I introduced her to the Forex, and I can see he is doing well. He came to the life account with, I think, $10, and 3 weeks she developed it to, I think, $100. Yeah.
It's better for them.
He has the confidence.
Yes, to do it yourself than me giving you a signal. Because what I'm seeing, you might not be seeing the same thing, but what you are seeing, maybe I might not also be seeing the same thing.
Yeah.
So I prefer not to give signals out or not to say. So that's why I do chat pattern, chat setup. So when I post the setups, you look at the setups, you look at what I've posted, you compare it to your chat. You mark up or you do anything. Maybe there will be 1 or 2 things you need from my chat, and you pick that thing from that chat, but don't trade the exact point that I'm trading. Because sometimes, most often, I miss trades because I'm always looking for sniper entry. I'm always looking for sniper entry. So most often price will come closer, 2 pip, 3 pip, and then reverse. But maybe you might be getting it. You might not be looking for a sniper entry. So you might get the good entry point for you. But I'm looking for a sniper entry. I use the wicks to enter. They will come and hit my entry, and then quick price will quickly reverse back. So most of the times I can have 5 setups and 3 will be missed. 2 will have 2. I will get the 1, and 1 I will lose it. It will come to that entry point and just run through my entry and hit my stop loss. Yeah. So we all have different perspectives when we are looking at the market. So I rather prefer you how to do it than me doing it for you.
Yes, I see.
Yeah. So you kind of see this. So these are the levels. Maybe it's This could be what? Support. Support. You see, support. So when it reverses back, we take the trade. So you see something. This is when I add the support and resistance to this. I don't want to use one day to teach all these kind of things, because if you see that they are messaging me now, it's almost 4 minutes to start another with another paper, a lesson with another paper. So this gives you the confidence, because you see that the moment the price comes here, it might be a previous support that stops price. So when it hits that level, it will reverse again. There will be a retracement. The expansion will end. So when that retracement comes, maybe let's say you miss this trade, you have nothing to rely on. There's nothing there. So the moment another expansion occurs, so we are relying on this setup. Let me do it clear. We are relying on this support to take the trade, because once it stopped price here, finally price was able to break through. When it comes here again, it will stop it. So we are going to stand here and buy and take the first profit here and to the second profit here, and then we swing until price comes down and give us a pattern like this.
Okay.
So you see the scenario that I'm building. So maybe next